Q3 was actually a really interesting report because it's the fourth quarter in a row where we're actually announcing cash flow positive and meeting or beating objectives to the street. And it's important to us because we're earning our credibility with our investor base right now. We announced, there's a couple different aspects of what you announced. We announced that our gross margins were extraordinarily strong. And we're trying to be very good to our investors, and we're trying to guide the business appropriately. So it was wise for us to raise our objectives on our annual guidance around gross margin. The question you asked is, why was it so good? Well, I was really happy when our CFO woke me up that morning and said, hey, guess what our gross margins were? They were phenomenal. But there's a couple reasons for the reason why our gross margin was so strong, and it's all positive. We had a little benefit from foreign exchange tailwinds. The U.S. dollar was a little bit stronger. We do a lot of business in the U.S. We benefited from that to some degree. We also had a bit of a product mix opportunity in Q3 where we tended to ship more to end users than OEM customers, and the OEM customers tend to have a lower gross margin. It just kind of all came together beautifully in Q3, and our gross margin was quite strong. But it really points to something, I think, even more indicative of the strength of the business, is that it's also indicative of the fact that the value of our product is high. The customers are buying it, and they're paying a high value for it. The products that we sell are the highest priced NIC cards in the industry. So if we don't sell value, our price will erode. So it's a good sign of non-discounting and high value. It also is a good sign that we're doing a good job managing the bottom line, that our products are designed and built with the lowest cost possible structure, and we're delivering it at a very high value to our customers. So all of those things came together in Q3 with high margin. So we decided to reset the guidance for the year. You asked a question about Q3 revenue, and is there some seasonality associated with it? And it's a good question because we had that question in the Capital Markets Day a little bit earlier. Why wasn't your revenue sequentially higher in Q3 over Q2? Is that okay? Is that the way it should be? And the answer is yes, we guide this way. We are not a recurring revenue business. We're not a software business that just charges a license or a monthly recurring fee or anything like that for. We tend to be a little bit seasonally based. Q3 typically is our most challenging quarter of the year. So if you look into history, Q3 tends to be our lowest quarter in terms of revenue production. And Q4 historically is our best quarter of the year. So we basically have, like many companies, a seasonality structure where kind of Q3 is our lowest quarter, Q4 is our highest quarter, and Q1 and Q2 kind of share the middle two spots. What was good about the report in Q3 was we came out of Q3 with pretty strong revenues for Q3. If you look historically, annually, we looked really good, but historically, we also looked very good. And we feel good about the momentum going into Q4, so we'll see how we can do.